Hi guys, I'm Willem Kumalo from Pam Golding Properties. I've been in real estate since 2012. I have a lot of clients asking a lot of questions in this particular time going through this pandemic, and I have a few questions myself. So then decided to bring in an expert from Ooba Homeloans. This is Natasha. She is the business development manager for Gauteng North at Ooba Homeloans, and my former friend, as a result of multiple 30 seconds whippings, but still managed to get her on for this. So you can introduce yourself, Tash.
Well, I certainly hope that my content is more factual than your past. I believe the winds were weighted in the other direction.
That's for another time.
Thank you for having me, Willem. It's nice to see your face. I look forward to chatting. I've been with Ooba Home Loans for 17 years, going on 18 years. Quite a mixed bag in terms of the positions I've held. Spent a lot of time in development, spent time in big real estate offices, and now head up, as you said, business development, which means it's my job to grow market share in Gauteng North.
Okay, cool. So yeah, just a quick disclaimer. Although I work for Pam Golding Properties, this is, the whole disclaimer thing, not their views, my views, that kind of thing. This is literally just to, help myself out as a homeowner, but also I know a lot of my clients have a lot of questions. So I thought it would be nice just to have everything in one place. It'll be quick, just 5 of the main questions that I know Tash has been getting. I've been getting some of them as well. And hopefully will help out the people watching, pass on to your friends and that kind of thing. It's good to have expert information from the source as opposed to secondhand information. I've got the 5 questions here. I'll put timestamps for each question when I edit this. But basically, we'll just go through repayment relief options, bank processing delays, reassessment of bonds granted pre-lockdown, deeds office reopening, I know that's a big one, and of course interest rate reduction, when were they last this low, and how much can you save on R1 million, just for a nice round number, just so people know what they're dealing with. So yeah, let's start with the first one, repayment relief options.
Yeah, so Willem, obviously the first thing people want to do is try and, or in any financially stressful situation, obviously this one is unprecedented. The only thing I can relate this back to is maybe 2008, when the financial industry was kind of the first industry to get hit hard by the financial crisis of 2008. The same would apply probably in this situation to the travel industry. But as a knock-on effect, we're all going to feel it eventually. So people want to preempt, a reduced income or additional financial stress and try and see where they can potentially save on their monthly outgoings. So generally, people will find that their bond repayment is one of their largest expenses. As a homeowner, you could probably relate. That's why it's always the dream to be bond-free.
Yeah, exactly.
So each bank is going to individually assess an application. You can post it on all your pages. I've given you a little infographic with all the contact details. So our advice would always be to go directly to your bondholder. And certainly you would have to, number 1, qualify for a repayment holiday. It's not just a given. And number 2, you'd have to understand the various options and the terms and conditions attached. So a repayment holiday, I think for many, people just think, okay, I don't pay my bond for 4 months, and then the remaining term of my bond gets extended by those 4 months. So it's not generally that simple. You might end up with a case of interest upon interest. So it might end up being expensive. I know one of the big 4 banks is offering a term loan instead of a repayment deference, which is actually ends up slightly cheaper. You could take out a personal loan or potentially increase an overdraft, which also might potentially work out cheaper depending on the term. First prize is always going to be if there's any way you can make your normal payments. and skimp on something else. I know it's very, very tough at the moment, but that's going to be probably the most cost-effective way, is keeping the monthly repayment as it is. If not, speak to your bondholder directly and ask for various options and make a calculated decision.
Okay, great. So no sort of blanket statement to put out there. People just go chat to your bank. It goes on a case-by-case basis and work it out from there pretty much.
Yeah, for sure. I mean, there are going to be exclusions. Excess bonds, if you've really, really drawn down to the bare bones, might be an exclusion. Things like building bonds might be an exclusion. It's going to be in relation to the way that you already are servicing that loan. If you're a high-risk individual, or you've missed a couple of payments, or you've got other credit bureau issues, the chances of the banks extending your relief option are also maybe going to be lower. So I can't go out and say, go to your bank, this is what they'll give you, I promise.
Yeah, fair enough. Okay, so let's go to the second one, bank processing delays. This is one I've been getting a lot from my clients as well. So even from people thinking about buying, you do get a lot of comments around people holding back because they think potentially absolutely nothing can happen in this time. From your side, as within the bond consultancy field, what's been your experience so far?
So I think post or even slightly before the initial lockdown was imposed on the 26th, about a week before that happened, even the announcement happened, we were finding that the banks were already prioritizing further loan applications. And just to tie in with the repayment relief question, a further advance might also be an option for people that have got equity in their homes, okay, in order to assist with cash flow. But certainly the banks, and certainly specifically for their own clients, are prioritizing further loan applications as opposed to new loan applications. So assisting the existing clients access the equity in their properties to assist with a lump sum payout to assist clients with cash flow. We saw that kind of slow down. We saw people starting to work from home, a couple of weeks before the 26th of March. Yeah. I will tell you that some banks are more set up for remote working than others. So we are finding that certainly there are skeleton staff. We as Ooba Homeloans have managed to be able to connect with a key person at each lender, that we are getting things done. So the banks are assessing new loans. It's not their first priority. They certainly have a longer turnaround time. And obviously the clear issue is going to be receiving an approval in principle, which is linked to the client. That's always going to be subject to a property valuation, which in most cases is going to be a physical exercise, which obviously we can't do under lockdown. So we might sit with a lot of cases where applications are approved, subject to a physical valuation being done post-lockdown. So we won't necessarily get to the final quote stage where we can instruct attorneys.
Okay, so would you say then there is still benefit for, let's say someone had a look at a property prior to lockdown, or even if they want to make an offer on something that they've seen online through a video tour, whatever the case might be, is there still value in someone getting that process started now as opposed to waiting till the end of the lockdown?
So 100%. I think, coupled with the reduction in volumes, which is happening organically anyway, given the current circumstances, the banks are actually in a position to assess applications because the volumes have reduced. So even though their capacity has reduced, the volumes in turn have also reduced. So I would encourage anyone who's interested in purchasing a property to definitely go ahead. Transferring attorneys are working. Bond originators are working. Banks are obviously considered an essential service. Yeah. So your team is on standby to proceed.
Okay, cool. Okay, on to the third question, reassessment of bonds granted pre-lockdown.
So that's probably one of the most recent issues that have come up in kind of our world, where the banks have for quite a while been relatively happy to proceed with applications that are granted. But as obviously the economic impact has escalated, banks are certainly looking at applications that have been granted recently. When I say recently, probably about, the last 30 days back,
Okay.
and certainly focusing on applicants that are in specific industries. They haven't furnished us with the list, but I mean, some of them will be glaringly obvious. And either kind of withdrawing those approvals or instructing the bond attorneys to ask certain questions prior to those clients signing bond documents.
Okay.
So, yeah, so that, so that's obviously not great. We as Ooba Homeloans have asked for, or gathered our information of all granted funds, and are motivating on those already that have been flagged for reassessment.
Okay, so that's strictly from the bank side. So
Correct.
From the client side though, so let's say someone's in a situation where if they're applying as a couple, for instance, and one of them's been retrenched or whatever the case may be, is there a case for them to pull out, or do they still have to wait for that bank's final decision? And if they get approved, they have to proceed, or what's the navigation around that?
So it's, that's a tricky question, because I mean, obviously the buyer is kind of responsible, given the terms and conditions of the offer, to proceed with their commitment. Having said that, the National Credit Act is always going to protect the buyer in terms of declarations of change in financial circumstances. It would really be a case of that purchaser, going to the bank that approved the loan, and saying, here's proof that in fact my husband has been retrenched. I don't think it would be, it's a tough one. It's a tough one, Willem. I don't know how responsible it would be to say, we're just a bit worried about what happens, so we rather want to get out of the deal. One would hope that there would be a genuine situation where people have experienced, or certainly know that a retrenchment is coming, or a job loss, or something like that.
Yeah.
If they do, if they feel genuinely that that's the case, they would need to make contact with their bank and advise their bank accordingly. The bank is not in the business of reckless lending.
Yeah. Okay. Fair enough. Okay. Moving straight on to the fourth one. Deeds office reopening. So it's a tough one.
Yeah, so I think this is what everyone in the industry, I mean, every single stakeholder is waiting for. I think there's ongoing communication by everyone from attorneys to real estate to certainly mortgage originators that have put in pleas directly to government with motivations, etc., to open the deeds office. We do know that the deeds office flags any matters that have been stagnant for 12 days, and those get withdrawn. So we know that there's going to be a situation where a lot of those transactions are going to have to be reinstated. But we also know that there is a skeleton staff that is issuing transfer duty receipts. So that process is still happening. And we know that there's a skeleton staff department that is handling rates clearance certificates. Certainly in the Cape Town Deeds Office, we are waiting for details on Johannesburg and Pretoria, but the industry is pretty confident that we are making strides in terms of our lines of communication with government, specifically on the Deeds Office issue.
Okay. I think it's also just worth noting that at the time of recording, it's the 21st of April, sort of early afternoon. I know there's another presidential address this evening. Whether that'll affect anything or not, I'm not sure, but that's just for overall context. Yeah, and then we'll move on to the fifth and final question. Interest rate reductions. When were they last this low, and how much can be saved on R1 million? So
I pulled out and we kind of update. We've got a table that we generate. We update every time there's a rate change. Yeah. I'll just quickly pull it up on my side. It's been quite a while, and we actually take this figure back to 1998. I've got no idea why I can't open it. So to answer your question without opening the document, The last time they were this low is since 1998, never.
Yeah.
The closest we've gotten, which is funny enough ties in with when you started in real estate, is 2012.
Yeah.
When went down to 8.5% for all of 5.5 microseconds.
Yeah. Yeah.
But we've never
Shot
been
straight up.
7.75. Do you remember?
Yeah. Clearly.
Yeah. We've never been 7.75%, not since 1998.
Okay.
So
Cool.
three things are going to happen when interest rates drop. And sorry, also just to give you that practical example of what that means. So we talked about a round figure of 1 million. The average purchase price that we bond for is probably about 1.2 million in our region.
Yeah.
And the average purchase price of a first-time home buyer is between 8 and 900K. So 1 million is a nice little median to use. So the jump from, and obviously there have been 2 interest rates drops in the last month. It's dropped at 100 basis points twice.
Yeah.
So on 1 million, it's going to be 1,276 Rand a month. And over which constitutes over a 20-year loan term, a total saving rather of 306,000 Rand.
Okay. Yeah. So significant, definitely significant.
So significant.
So yeah, that's part of what I've been trying to use when chatting to potential buyers and explaining what a buyer's market is and why right now, April 2020 is a good time to buy property. Because obviously that affects your bottom line. That's your monthly repayment. And if you're buying for an investment, I think it's all of a sudden become more realistic to have a fairly decent return over and above your bond and your levies and that sort of thing. So yeah, definitely I think an excellent climate for people to start looking and trying to buy properties right now.
Yeah, absolutely. I didn't study economics. I do know people that have, so I don't be an expert.
Yeah.
But
Over 10
certainly
years ago,
an interest
yeah.
rate, like riding a bike.
Yeah.
Obviously, when it drops to kind of these record lows, 3 things are going to happen. Number one, people that are existing homeowners are going to have relief in terms of their monthly outgoings, their expenses. And certainly people that have any interest generating debt, not only home loans, it's going to result in, assisting with a reduced outgoings every month. Number 2, certainly first-time buyers will have the opportunity to maybe qualify for something that previously they couldn't afford in terms of calculating affordability, both in the way that the banks are going to qualify them and also in terms of what they can afford on a monthly basis. And obviously third, as you say, when investors are running their numbers, property investors and certainly landlords, it's all about a numbers game. If the calculations don't work up front, the transaction doesn't make sense.
Yeah, true.
So this is certainly going to assist that investor, as you said, with running those numbers and having them make better sense for investing in additional properties.
Cool.
So it certainly is good news all around.
Yeah.
And I think we have to hold tight to anything positive in these unprecedented times.
Yeah, for sure. So yeah, I think everyone's kind of playing it by ear. We'll see how it plays out. I think we've covered the main stuff for now. I'll send this out and see what the responses are. If people have any more questions, maybe we can have you back on if you don't charge me a retainer this time, seeing as you're a big shot now. And see what we can do for maybe future, whatever this is. It's not a podcast because I don't have my headgear, but I suppose we can call it a podcast. So we'll see what the questions are and maybe we'll get you back on then.
With pleasure. Always great chatting. Cool. And what I'll do, obviously, you can post if I hear anything updated on Deed's office and anything else relevant to update. I'll share that with you, so you can do that in the interim, and also some of the bank contact numbers for repayment relief. I think you can publish on your side.
So I'll post those graphics alongside this. So that's the how much you can save at each price point. I think you sent the banks, and there was a third one. What was the third one?
The interest rates, just
Yeah,
for
that's the one.
that.
Yeah, so that'll all be part of this video. Yeah, and then we can see for next time what we chat about.
Excellent. Thanks for
Cool.
having me, Willem.
Yeah, thanks so much for your time, Tash, and yeah, until next time. Thanks.
Cheers.
Cheers, cheers.